Guillaume, thanks very much for joining us. It'd be good just to get your sense of, I suppose, where we are in terms of the markets at the moment in France. And I suppose, what are you seeing as the key trends and the outlook for 2022?
Obviously France is, and especially, Greater Paris is a very sought after market after Germany. Thanks to Brexit, now we're number two on the list in Europe. I would say in terms of trends, people are, start shying away from offices as they see, the long trend maybe being a little bit more cloudy due to the work from home and, all the COVID impacts. There's a lot of pressure, obviously, on beds and sheds. All the institutionals are chasing that asset class, and we've seen yields in that segment, I would say being really low those last, I would say, few quarters, and notably for sheds. Sheds prime yields are now getting close to 3.5, which, maybe 5-6 years ago, it was totally unacceptable to think about that. But, due to the logistic pressure and, obviously all the big Amazon and everything coming, everyone sees a bright future, even if the pressure on the land and, the constructability on the land is getting harder. I think, there's still a lot of room in that kind of space. Obviously, if you want to get a lot of value, you need to be really ahead of the chain. So, partnering with a developer or even getting more ahead with a landscaper. In relation to the bed segment, the thing is, France is, I would say, is not a market like Germany or Ireland, when you can do BTR and you can get, really easy resi development. It's a really hard market to penetrate, as one, there's not a lot of block sale available, and two, when there is, I would say the price expectation are so intense that mostly really long-term investors or social investors can get into this to avoid, I would say, the social housing impact. So it's not a really profitable market as of now, but I would imagine that as more pressure comes on it, and hopefully if there's more release from government on resi development, this is a segment where more and more institutional are going to get into. And obviously, as we were mentioning in the larger discussions, I would see a lot of a shiny perspective for the storage space, which is getting more and more interesting. Data centers, and obviously, all the alternatives. So alternative of resi, so senior housing, co-living. We've seen more and more strong operators coming into the business that are being bankable. So, buying a lease from a co-living company now is something that is as I would say as vanilla as buying a long-term office lease. So the market is moving, obviously, shying away, I would say, from the mainstream we have seen after the GFC for new alternatives. So new actors, and I would say more and more now we're trying more to assess, I would say, operating real estate, such as we said, co-living, co-working, senior housing, versus buying direct real estate.
Really interested to catch up as ever. Thanks very much for joining us, Guillaume.
Thank you.